5 minutes to get that new coffee. Get her done. Here it comes. Hey Mom, your music's a bit loud. Turn it down, I need to do YouTube. Mom, turn your music down, I gotta go on YouTube. Seriously, turn it down. All right, thank you. Thank you, Mom. All right. You guys here? Can we start this thing we call YouTube? Cool. What do you want to do? Huh? Gold, oil, Bitcoin, something else? Yeah. Yo, 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 yo. Wasabi. Ni hao ma. Jumbo. Good morning. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Because trading is risky, not appropriate for everyone, your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Let's go! Yeah, so what do you want to do? Gold, oil, or Bitcoin? I got some South African Rand. Yeah, just sitting here. We're doing analysis, which means if you're just waking up and rolling into the New York session and you haven't spent an hour doing analysis technically and fundamentally, you are already way behind. Whoa. In fact, you're not really being that competitive. Huh? Yeah. Yeah. Well, don't get all on me. Don't get all. Don't get all. Look, I'm making a point. This is about having the tools for success. Part of that is TRADARS. Covers sentiment, fundamentals, and technicals. Performance coaching. We narrow your spread. We give you trading tools. Oh, my goodness. Yeah. Oh, my goodness. If you use our prop fund, TRADARS will either be cheaper or even free. Whoa, dude, that's amazing. I know, right? Well, let's get a quick update. Let's use our Squawk Box, what we call the headline news radar. Radars for traders. You get it? Radar for traders.
Trump. The great, big, beautiful bill will grow the economy like it has never grown before.
FTSE 100 recovers after weak startup marginally.
ECB's DeGuindos. Recent developments may well have a dampening impact on growth.
Brazil retail sales, MOM, above forecasts, 0.8% in April. Actual, 0.4%.
Crypto today. Bitcoin, Ethereum, XRP risk further decline amid softer volumes and profit taking.
Forex Live European FX News Wrap. Dollar struggle continues. Risk on the defensive. Euro pushes the fresh multi-year high. Scotiabank. Canadian dollar reaches fresh recovery high. Scotiabank.
UN nuclear watchdog says Iran in breach of obligations. Iran announces countermeasures.
US dollar weakens broadly as trade headlines compound CPI losses. Scotiabank.
Is that it? Did I miss it? Yeah, I guess that was it. I thought there was some more. Cool. So anyways, I was distracted, so I have no idea what the headlights were. But, I could just redo it. FTSE 100 recovers after weak startup marginally. Yeah. So, anyways, that's so funny. I was just totally lost. What just happened? Anyways, yeah. Cool. So, anyways, there's the headline news. We're 8 minutes away from continuing claims. Okay. 4-week average on claims. What? Initial claims 240, 247. Wayne, is it any good? PPI, is it any good? What does it all mean? Wayne, can you put it in a context? Yeah, of course I can put it in a context, dude. What do you think? Obviously, I can put this into context. Yeah, so I think the bigger you might think PPI is the big deal right now, but really I'll show you CPI and why it doesn't matter that much. Today's PPI, and I'll zoom in. I'm not going to do a big deal on this because I've already done all this an hour. Anyways, boom. Okay, so are we worried about PPI? No, we're not. This is CPI. But does it show there's inflation worry right now that the Fed's going to freak out? No. So why should we care about PPI? We have a Fed meeting next week. What do you think? They're still like, oh my God, well, I'm not sure what to do because of PPI. No, no, we're moving on. But you know what is interesting are these weekly claims. Are they watching claims? Yes, they are. And we're rising. Okay, I have our 90-day average at 228. Okay, now I can do how about 1 month average, 234. Okay, and we are climbing significantly above that. So if we have yet another in the 240s, there's something significant going on. 234, huh? Yeah. That's a big deal. Okay. Yeah. Well, that's a big deal. Now, they have 237. We have 234. So we're measuring probably something similar but different. But nonetheless, if we're above that average, then that is interesting, huh? That's the big thing that will maybe impact the Fed to cut or not cut in September. And that's what we care about today, not PPI. PPI will have no impact on the Fed meeting next week or September. But weekly claims could. So most people, I think, are going to be looking at the wrong thing. Everyone wants to talk about PPI. I think that's a distraction, a diversion. But at least you have the tools to check it out. Pay attention to these things as they come out. Do we get a reliable, repeatable pattern? Well, again, I don't care about PPI. The answer is yes, there is a reliable, repeatable pattern. But I don't know if I care. So scalp, 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 scalp. So there's no long-term impact on PPI in general based on past performance. It's not indicative of future results, but we do have the data. And either way, you end up, no matter what, greater than expected or less than expected, you end up selling the dollar. Which means there's something else going on on PPI day than PPI. So you either sell the dollar or you don't sell the dollar. Does anyone think that's good to know? Of course it's good to know. Okay? Of course it's good to know. So we have all this data. You can very quickly go through it and look at what happened in the past. Maybe there's a difference in how bearish you get in the dollar. Well, you can go back and look at the actual charts. See, August 13th, 2024, this is what the charts look like on euro dollar before and after PPI. Oh my gosh, this is a lot of great data. It's amazing. I mean, it truly is, isn't it? That's a lot of data. The US dollar is lower, led by the euro US dollar, which is breaking to a new 2025 high. What next? Initial jobless claims and PPI coming up next. Cool. It's so good, isn't it? It's so good. So let's see what you guys are thinking. Can we get one more vote? Nah, we're going to do 29. We're going to round up. And risk on, risk off, very risk on. So bullishness, more bullishness than bearishness. Nobody's scared about the plane crash in India. Nobody's worried about that. Boeing down 8% for the day. You don't think that's going to drag the Dow down? Interesting. Some of you, but nobody is very risk off. Yeah, last time I looked, Boeing was down 7.7. Oh, yeah, and Craig's like, and no one worried about Iran. Yeah, nobody worried about Iran? Well, some people, 31% are risk off, just not very risk off. I talked about that earlier today, Craig at traders.com, but nobody's very risk off. Yeah. Oh, Jim, are you buying the dip on Dow? No diggity, no Dow? Maybe use some options for that, huh? Little option play on the ball. Yeah. It might impact Dow more than S&P, huh? All right, 22 seconds. Okay, we're looking at this one. 22 seconds. 14 seconds. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. All right, is it going to be greater than 240? This will impact the Fed's decision in September. 240 is waiting. 248. Oh no, that really will increase the chance of Fed cuts in September. 248. Oh my goodness. Oh, the gracious. Yeah, that gives more evidence for the Fed. If they're thinking about September, they have a little more rationale. Whoa. That's really something, huh? Yeah, so let's take a look. We'll go to the charts here. Okay. This little salmon-colored box on the 5-minute chart says this is the right time of day to be trading. Yeah, it was a tough close yesterday, huh? So prime time in the blue box, prime time in the pink box. You should be trading in the pink box or the blue box. Okay. And yeah. Not a good day yesterday. Just doing some basic technicals here. Looking for things. Go a little further out. Yeah, a lot going on there. Yeah. I'm going to mark this zone as an area of interest as well. Long ways down. It's a long, long way to Tipperary. Yeah, eyeball it a little bit more. Yeah, a little bit more. Let me zoom in. All I want to do is a zoom, 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 and a boom, boom. So I'm trying to eyeball where this is going to be in the future. I can estimate that by magic. Magic we call mathematics. And we're right on it now, Bubba. Bubba. Ooh, look at that. Whoa. Holy smokes. Nailed it. Oh my God.
United States initial jobless claims above expectations, 240K in June 6th. Actual, 248K. United States continuing jobless claims up to 1.956 MIPS in May 30th from previous 1.904 MEMS. United States Producer Price Index year over year meets expectations, 2.6% in May. United States Producer Price Index ex Food and Energy year over year below expectations, 3.1% in May. Actual, 3%.
Neat, man. Neat. Okay, how neat is that? So, potential increase in odds of a Fed cut in September is my interpretation of the 248. Everyone's watching PPI and they're like, oh, PPI is benign. It's as expected. Who cares? Okay. So you got to know what to look at. You got to know the context of everything. So I find that very interesting here. So standard operating procedure. Yeah. Okay. This is just a high volatility event driven strategy. You guys may or may not should know how to do this. Yeah, that's something else. Boy, oh boy. Cool. All right. So, anyways, that's the standard operating procedure. All right. So, let's, so that was that. So, there's your claims and your PPI. Yeah, and your PPI. Oh my gosh, PPI. Are you guys ready to do the Fast and the Furious? You ready? All right, let's start with the S&P 500. S&P 500, are you bullish or bearish? What do you got? What do you got? Let me know what you're thinking. Sorry, I'm moving things around. Stuff in the news got in the way. Got all kinds of things going on. All right, sorry. I'm a little slow because of the news. Okay. Do you guys want to do reversal patterns and trending patterns? Yeah, sure. Okay. All right. So then let's go with the S&P 500. 3, 2, 1. Wah, wah, wah. What? So I'm looking at 5 time frames. The 15-minute, the 30-minute, the hourly, the 4-hour, and the daily chart. I'm looking for up, down, and sideways patterns, and I'm looking for reversal patterns like head and shoulders, inverse head and shoulders, Gartleys, bats, butterflies, blah, blah, blah. 1, 2, 3s, 3, 2, 1s. None of them exist for S&P 500. Nothing. Nothing. Okay, so be careful. Doesn't mean you can't trade it. It means there's no reliable, repeatable pattern on any time frame right now. Now, I can expand this and say, well, just show me every pattern available. Okay. There's one. And that's your big opportunity. A slight break of support. That's it. 38 minutes ago, we have a slight test of support. That's it. So I'll go ahead and throw those Fibonacci reversals, but I'm much more of a up, down, or sideways type preference here. So that's that. Pound yen. Talk to me, Goose. How do you feel about pound yen? How do you feel? What's your outlook? Or what for today or in general? Maybe you're bullish today, bearish forever. I don't know. What do you want to do? Well, we're going to analyze 5 time frames and looking for, so basically we're looking at least 100 different potential outcomes when it comes to what's going on with reliable, repeatable pattern recognition on pound yen. And you know what we see? Slight up with slight risk to the up. Mixed bag, mixed bag, mixed bag. It's mixed. It's like mediocrity at best. But when you get mediocrity, both bulls and bears are probably going to lose a little bit. So remember, we're not making a judgment call. These are not judgment calls. This is pattern recognition. That's that. Now, earlier today at traders.com, we went through and we looked at all the risk gauges on 3 time frames. And we already saw all of this, but not technically like we're looking at now, but fundamentally. So if you already had the mindset of mixed bag, when you look at this and it says, here's an uptrend with a reversal pattern, you're like, yeah, that totally makes sense. Now, seasonally, it makes sense too if you were worried about peaks and troughs. But the thing is, you have to understand the context of where you are. If you don't understand that, I'm sorry, my friend, there's no hope. There's no hope, my friend. Sorry. That sounds terrible, right? No hope. Yeah, well, if you don't know what you're doing or why you're doing it, why would you have any hope? Oh, well, I just feel like I'm predestined to succeed as a trader. Oh, you feel predestined. Well, good for you, sweetheart. And so, looking at 5 time frames for reversal patterns and trending patterns, there's nothing. This is all your opportunities for trading WTI. You're like, Wayne, I don't see any. Well, that's useful information, isn't it? Okay. Now, and Jim's like WT going up. Yeah, so like, headline news out of Iran could push that up, right? Yeah, but that's not fundamental and it's not technical, but it may be true. The thing is it reliably true? Yeah, maybe. It makes sense to me. I agree with the logic. How long is it going to last? An hour or a week? Well, there's no way for me to know. In fact, it's impossible to know. So, yeah, interesting, right? Sky Killer, yeah, succeeding was promised to me 3,000 years ago. Yeah. Well, you're at the Hanging Gardens of Babylon. It was promised to you. Okay. All right, so let's do some crypto. Now, traders.com does ADA, BTC, ETH, LTC, SOL, XRP. So you got your Solana, your Ripple, your Litecoin, your Ethereum, Bitcoin. But we're only going to look at Bitcoin because if you care about these other things, then why don't you subscribe to traders.com? Why don't you execute your trades through Traders Way with us? Why don't you narrow your spread by hanging out with us and using good tools? Well, of course you should. All right, so here we go. Let's use our technical radars for traders, traders.com. We're focused on the Bitcoin. Hang on. Nope. All right. The Bitcoin. What do you guys see here? Let's see, I just want to make it a little bigger for you. For y'all, all y'all. All right, cool. That's probably better, huh? Yeah. All right, so what do you think of the Bitcoin? Did you buy it at the Walmart? Yeah. By the way, I'm selling my Porsche on the blockchain. How cool is that? I'm tokenizing my Porsche. But anyways, I digress. 15-minute, 30-minute, daily. Short-term down, long-term up. So let's zoom in even more. Okay. Oops. Delete. Let me thin my marker. Let's make it pinky. All right. You got 2 choices of what you can do. It's not a tough decision, as you can see. I can blow you away, or you can ride with me. I said I'll ride with you if you can get me to the border. Okay. Anyways, you got the moving average opportunity if you're a bull, and you have the bottom of the channel as a bull. This is using SWOT analysis, and the link to the charts or the training tool on this. So there's downloadable. You download and you print the patterns, and there's the patterns show you how to trade each one of these things. So it teaches you SWOT analysis: strength, weakness, opportunity, threat. Okay, this pattern exhibits strength, not weakness. And the likely leg, okay, is an opportunity, not a threat. Okay. Does everybody have the training tools? The cheat sheet. Has everyone downloaded the cheat sheet? Here. It's in the description below. Let me bring it up just so you can see it. I'm grabbing the link. And I'm going to open this up. I'll pop the link. See? Flashcards. There you go. Okay. Learn how to recognize and trade the top 20 patterns. Remove all randomness from your trading to build consistency and confidence. Yeah. And it doesn't put you in an endless funnel of sales pitches. Nope. It just sends you the charts or the templates. Okay. So anyways, so long-term up, but short-term down. Well, that's what a dip looks like. So how do you trade this then? All right, well, let's say you're a long-term bull. Okay, long-term bull. So what do you want to see here? Short-term showing you strength with opportunity. Is this okay? Okay, let's do our SWOT analysis. Okay. Strength or weakness, weakness. Opportunity or threat, threat. Strength or weakness, weakness. Opportunity or threat, threat. If you're a bull, now if you're a bear, it's quite opposite. It's weakness as opportunity, weakness as opportunity. But if you were waiting for this, then that's not helpful to you. But if your bias is different, it doesn't change the internals, it changes the external. If you're a bear, okay, an hour ago you had an opportunity to sell high. Okay, 2 hours ago you were given a heads up. If you're a bear, that was an opportunity to sell 2 hours ago. Where were you 2 hours ago? Oh, I was looking at euro dollar. Okay, so anyways, that's that. That's that. All right, fast and furious, everybody. Let's keep going. That took too long. Oh, my God. This should just take you seconds. Okay, gold, everybody. What do you think about gold? Up, down, or sideways? Up, down, or sideways? Up, down, or sideways? Anybody? Anybody? 3, 2, 1, go! Bum, 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 bum. All right, 15-minute chart. Strength, opportunity. 60-minute chart. Strength, opportunity. 30-minute chart. Strength, opportunity. Daily chart. Strength, threat. But you have to read into this. It said if it breaks down here, if it breaks down at resistance, it's a threat. Remember, these are not signals. TRADARS does not give you signals. Gee whiz, are you looking for signals? That's your problem right there. Quit. Stop it. Okay? Be the boss, for crying out loud. Okay? No, there's this YouTube guru who charges $50 a month and he says he'll help me become rich. Yeah, he'll make you rich for $50 a month. Really? Dude, whatever. No, he's a really good guy. He makes so much money. Yeah. I'm teaching you how to think and analyze and make logical, intelligent decisions with data. And having the strength and courage to get out of bed and get the trade done. Okay? So anyways, right? You need the data so you can make decisions. So this says if it breaks down, then that's going to be a threat. Okay. But what we're seeing here is it's trying to stay in. Now, if it does that, once again, that's a threat because you're watching this zone for resistance and you're watching. I'll try to match the color a little better. Okay, you're watching this zone. Okay. And we are right on the razor's edge, aren't we? Yeah. Well, it's good to know that. So if our layers of vulnerability now are exactly where we are, or a little higher, or a little higher, or a little higher, or a little higher. Yeah, is this a danger zone? Yeah. Why is it a danger zone? Because if the market collapses at that price, somewhere, anywhere in there, the magnitude of the increase in risk is significant. This is just not a random, yet another dip. So you should probably be fundamentally opinionated on whether this should go up or not. Okay? Otherwise, you can't judge them. Okay? So you might be thinking, well, Wayne, to me, this looks like it was a 3-wave correction, and now we're on our way this way. Good. That's called thinking. I love it when you think. Well, you're so cute when you try to think. You're so cute. Yeah. Yeah. This is what we're looking for. There's a level of complexity to a pattern like this. Yeah. Cool, right? I know. But the interesting thing is it just takes a seconds to analyze 5 time frames. I didn't put reversal patterns. I only put trending patterns. Okay. Yeah. I only put trending patterns. So yeah, there's probably 5 time frames. Yeah, so we only look for like 56. It takes seconds. Okay. Okay. Cool. Now let me show you one other thing. I don't know if I want to incorporate this into our process or not. Oh, wait. I have to tell it to loop. There we go. All right. Cool. All right. So maybe just a little quickie on the macro. Maybe I'll start with the macro overview. And then we can do the sentiment overview or something like that. We're still exploring this new procedure. Do you guys like the new process in the morning? This fast and furious? I should be doing it faster. I get it. I'm trying to find my way while you find your Wayne. Do you guys like this? Yeah. I mean, look, if you don't like it, why am I doing it? Yeah. 100% of gyms agree. Yeah. A little more entertaining. Are you guys using the hot list, the jump links, the chapters? Are you guys using that? Because that takes me time, That's not automated. I have to sit there. It takes me time. I have to do that. Yeah, thank you. Thank you, Craig. Yeah, it takes time to do all that. I had to make this little image. I did that. I know you're like, dude, it's a little amateur. What is this, fifth grade? Well, dude, I'm doing my best. Okay. Yes, Sky Killer. Probably the thing is people aren't doing it. But anywho, so I think in the macro section we can cover at least this. Today, look, we're mixed. Our hit list is much the same, but has grown a little more positive. And the bearishness, we got our neutrality. There's three things we're bearish on. That's it. Huh? Isn't that interesting? And there's some built-in Kiwi strength over here, and over here. Okay, so bearish, bullish, but the markets are mixed. Here's our little scatter plot. Bitcoin way down today. Yeah, I got out of Bitcoin yesterday, so I'm glad I did that. Okay, dollar weakening, Bitcoin weakening, gold 3,400. Oh my goodness! Will it break higher today? Okay. The other thing I could do is expand on this this daily, because we can do this, and we can see it's a mixed bag, but it's interesting. An hour or so ago, I guess an hour and a half ago, I met with the TRADARS community. We reviewed the risk gauges, and the long term was not risk on. This has just changed. Very recently, this is ever so slightly moved to risk on. Huh. See, it updates. Isn't that nice? Yes, I know. So one of these things is going to be on our daily macro. Probably this one where we can just quickly review what's up. Okay. So there you go. So there's traders.com. Market sentiment, market fundamentals, market technicals, performance coaching. We narrow your spread if you trade through us. And if you're a profitable trader, we can help you on the prop side. And guess what? There's no exam. There's no test. There's no rules. You can scalp, spot, swing, trade. You can use MT4. You can automate it. We have one rule: don't lose money. What's the second rule? There is none. Don't lose money. Now, the upside, you get to keep 100% of your profits. And on top of that, I PayPal you some or all of your subscriptions fees to our platform. Okay, back to you. So your spread becomes more narrow through our rebate, because if you're in our prop fund, you're also in our rebate program. So your spread is narrowed. Meanwhile, you get some or all of your platform fees refunded back to you through PayPal. Oh, is that right? You're right, Grump Cat. You're right. That is one of the rules. So I'm sorry. You're right. That's only because spreads normally increase around that. So I think that's to protect our trading partners, because you get you get clients that go, my broker's scamming me, jacking me on the spread. And, and what's happening is, in the variable spread, when there's news, market participants stop trading, except for retail. Institutional traders stop trading, and the spread widens because of lack of liquidity. Now, we're only talking about a couple of pips, but compared to normal, institutions stop trading and retail loves to jump in. And so the spread might go from 2 pips to 4 pips or something right around the news. But that's the market conditions. That's what a variable spread is. It connects you to the closest trade, right? Like you have to be offset by somebody. And so those that are trying to scalp 3 or 4 pips, maybe they get knocked out on a trade because their spread widens and they're like, oh my God, it's my broker hunting my stop. Dude, shut the back door with that nonsense. That doesn't happen anymore. So that would be the rule to protect both the broker and the client, to say, look, don't go 9 lots long euro dollar at news event on your $500 account with a 3 pip stop. Because if it goes to 5 pips, you're out. You know, and people do this. So it's another reason I'm on the, did you guys know I'm on the Prop Association? Hang on. I'm on the wrong browser. I think that's the, yeah. So I'm part of the Prop Association. This is the first watchdog overseeing the prop fund community. And having talked to some of the founding members, they, you know, I've known them, and I've been friends of some of these guys for many, many years. And some of the founders were brokers, foreign exchange brokers, and then and honorable ones, not sketchy. They were honorable ones running a good quality, tight firm. And then, so that's their point of view. And then when they started a legitimate prop fund, they were out there competing against, you know, fly-by-night scam artist prop funds. And they were doing it legitimately, where everyone else was going out there, you know, basically scamming people out of $50 trials, right? And so they're like, they had to compete. They're like, well, how do you run a legitimate firm against illegitimate marketing a-hole, liars, scumbags? Well, you can't. It's very difficult, right? And so they saw that point of view, and they're like, man, we got, you know, that's not cool. That's not good for the industry. It's not good for customers. Also, the vast majority of their clients had tried multiple of these other fly-by-night scam artist prop funds, so they have had nothing but bad experiences. And so then they would go and try their legitimate prop fund and just carry over the negative baggage and then complain because they already had a negative outlook. And they're like, wait, we're not doing anything wrong. We're doing everything by the rules, and the clients are misunderstanding, right? Yeah. But then they also found that the scumbags and scam artists, other prop funds, were also leaving fake negative reviews for their legitimate prop fund. Oh. So anyways, now they divested from the prop fund industry, but they're like, man, we love the prop fund industry, but there needs to be a watchdog to make sure everything is legit. And I'm like, I totally support that idea. And that's what the Prop Fund Association is, huh? And so if you go to About Us and you go to the team, that's me. Okay, cool. Yeah. Well, actually, to be 100% transparent, that's not me. It's a good facsimile of the Wayne, but that's not me. That's 100% AI. I don't own that tie. I don't own that suit. I've never been in that room. Kind of looks like my chair. Looks like I'm a lawyer or something. Those are, but anyways, it's a reasonable facsimile, right? So, anyways, I support the idea that you should be trading real money. You should be paid real money, and you should. This should all help you become a profitable, conservative trader that can make a career of this. So if you sign up with the prop fund that says, hey, pay $50 for a test, and then you pay that, and they're like, you've moved to phase 2, pay $200 for the next one. And then you do that, and then they're like, oh, now you've qualified. We're going to give you $100,000 in real money. 99% chance that that's not allowed. It's not real. It's required that they tell you it's not real money. It's not real money. Yeah, 99% chance, I would guess. I don't know. But it's not real money. You think there's a business model in giving amateur traders $100,000 to trade with? Do you understand that? Do you think that's a viable business model? Let's give 1,000 traders $1,000. That's $1 million. Let's give 1,000 traders $10,000. That's $10 million. Let's give 1,000 traders $100,000. That's $100 million. Would you give $100 million to 1,000 amateurs? Does that make sense to you? It's not real money. If you actually happen to be profitable, they're paying you with the losses from everybody else, in my humble opinion. I don't know the other firms. I can't prove it. I'm not looking at their financials. But I'm a venture capitalist, and I'm like, that doesn't make sense to me. What kind of business model is that? Oh, they make money selling, hope to poor people. Well, that's been around a very long time. Yeah. Margin trading, ghost money. Yeah, well, they should be. Yeah, it is a demo account, Richard. And if you look at the fine details, I'm sure it says in the terms of business or whatever, the terms of the contract, whatever, when you sign up, if you look at the fine print, it tells you, yeah, it's a demo account and we're paying you with fake money, right? And you're like, well, Wayne, I'm a successful trader. It doesn't matter. I don't care how they pay me. I get real money. Okay, but then they're also asking you to make 10% a week. Yeah, you're going to fail, dude. That's it. I mean, you're going to blow up your trading. It's designed for you to fail. I don't like that. So we don't do any of that nonsense. But we help you succeed. Yeah. My goal is for you to use TRADARS for free. So you can keep all the profits, and I'll send you part or all of your subscription to our platform back, because I want you to be a successful, profitable, professional foreign exchange trader.